and also direct lending. And I'm sure all of you are asking, okay, what is really venture capital? But first, allow me to ask this question. What do these companies have in common? I think you all know about Google, Apple, Microsoft. All of these companies which have changed our lives, which we use on an everyday basis, have been backed by venture capitalists. And we have also a few local examples, such as Jahiz, Quyud, and Nana, and Tamara. These companies continue to change our lives on a daily basis. So let's try to understand what venture capital is. And in order to understand what venture capital is, I think we can try to understand what venture capital isn't. So allow me to paint this picture. You're starting a laundry in your neighborhood. You're gonna go into your Excel and probably start to figure out what the pricing is gonna be on the rent, how many people you need to run the business, what the equipment takes, and you're gonna figure out how much it costs to start for a year or two. And you're also gonna know how many customers, you can estimate how many customers are gonna come in. So your laundry shop that you're gonna start is pretty predictable. You know what's gonna come in, and you know how much cost is gonna go out of the business. It's quite predictable. When you go to a bank, you can probably get a loan. And if you want to sell a share of your company, which is called an equity stake, to investors, they probably will take 50% of the company and invest in that company. Now, if you want to start 1 or 2 or 3, you started your laundromat and it's quite successful. Now you want to start 2 branches, 3 branches, 10 branches. Whatever you took to start the first branch is probably going to be multiplied by the number of branches you need. If you need 1 million to start 1 branch, you probably need 10 million to start 10 branches. And as an investor, that's not very attractive. Now let's look at what venture capital typically invests in. I'm sure a lot of you today have ideas about technology businesses that you want to start. But that idea is so big, you want to change the world. How can you get there? In order to get there, you first need to get seed money or small investment like 500,000 riyals, 600,000 riyals to start the business, prove the idea that this business can be actually successful. But what we don't know about the business is how big is it really going to get? If you ask Steve Jobs, I'm sure all of you have heard about Steve Jobs. I watched a video where he was in his early days saying this company can probably sell $10 billion one day. That's his dream. Today it's selling multiples of that. Even Steve Jobs, who knew everything about his business and he could predict the market size, did not know exactly how big the company is going to be. And that's the same with Mark Zuckerberg and all the other entrepreneurs. They never knew that their companies are going to be trillion-dollar businesses. But one thing about starting a business in technology is that most likely if you go to a bank, they will never give you that money because it's too risky. So how do you actually finance it? You finance it through going to venture capitalists, angels, and we're going to talk about that. We're going to explain each one of them, what they do, and what do you get out of them. From my point of view, we're looking at investment in terms of risk and in terms of reward. Venture capital is definitely the most risky asset class that people typically invest in compared to real estate or to stocks. And I'm sure if you guys have invested in money, you're in the stock market, you have lost some money. It's quite risky to invest in public equities. However, venture capital is even riskier than that. Let's talk about an example of what it looks like in the VC world, what it actually looks like. We don't have money, really. So all of myself and my partners, we don't have money. We go to investors, we call them limited partners. We ask them to give us that money to invest it in companies and portfolio of companies. And these limited partners can be family offices, can be individuals, can be endowments. It could be the PIF, for example. And they trust us with that money to invest it in companies. Now, put yourself in my shoes. Let's say you and your friends go and say, we want to invest in startups, and you gather like 10 million riyals or $10 million. That $10 million, you decided collectively to invest it in 10 companies. Each company is going to take 1 million riyal each. Now, with that idea, imagine that 80% of the companies you will invest in will fail. So you invest in 10 companies, 8 of them will die, 2 of them will not, and you just raised 10 million riyals to invest in these companies. Your investment is worth only 2 million riyals, what you have remaining in these companies. What's the first thing that comes to your mind? How am I going to return the money to my investors? All of my friends who are asking me, where is my 10 million riyals? You need to make that money through the 2 companies that are successful. So, and even then, 1 or 2 companies is probably too much. It's probably 1 company that's going to succeed. So that company, out of 10 companies, needs to return 10x what you have invested in order just to tell your friends, hey, I didn't lose money. Now, your friends did not give you that money just to not lose it. They wanted multiples. They gave you $1 million, they wanted 2 million, they wanted 3 million. So that 1 company is probably going to have to return multiples on that, which means not only 10x, it's probably going to return 20 or 30x or 40x or 50x for you to be a great venture capital investor. And that's the risk that we live with every day. I believe most of our portfolio companies are going to struggle. They're not going to return money. But how can we make those 1 or 2 companies great successes that will return 10x the fund? So I want to talk about the financing cycle, how it looks like from idea to IPO, really. First of all, we all have ideas in technology. I want to start an app that allows me to play football with other people, as an example. Now, I have that idea. Nobody's going to believe in me at the beginning, so I have to ask my friends, family to put money in just to get that app out. Imagine that app has started to really take off. You have 10,000 users. You can go to venture capitalists now. The MVP is actually real. You have users who are using the product, and you're growing, but you're not a real business yet. You're just starting out. So you come to venture capital. They're going to invest in you a few rounds, what they call seed, Series A, Series B. Then you get to a real company stage. You have maybe 100, 200, 300 employees. And you're probably generating revenues in the tens of millions of dollars or riyals. You move on to next to the growth equity stage, where people are going to finance you to get to a maturity stage, where the company is real, profitable, it has probably hundreds or thousands of employees. And then you get to a point where you exit that company. But early on, you have that decision of how can I finance the company at the early stage when nobody's believing in me? My family might give me money, but it's a tough decision to take it. So let's look at how you can finance that idea that you have and get it to a real company. First thing is that you can do bootstrapping. Bootstrapping is such a fancy term you don't have money, so you got to invest your profits. Imagine if you have a shawarma shop and you're buying shawarma for 1 riyal, you're selling it for 2 riyals. Now your profit is 1 riyal per shawarma. And each time you need to expand, you're going to just rely on that 1 riyal profit. So if you need to start another branch, it costs $1 million or 1 million riyals. You need to sell 1 million shawarmas to finance it. And it's quite slow. It's quite difficult to get to that point. And I think all of us are impatient, so we seek outside capital to grow the company even further. Then you turn into your family and you look, okay, my dad has some money, my mom might have some money, my brothers do too. And I think it's easy money. I can just tell them they trust me, they know that my idea is great and I'm smart. It sounds all great, and they all believe in you, they're going to give you the money. But there is one big drawback when it comes to that, which is every single dinner conversation is going to, when things don't go well, it's going to start going about, where's that money? What happened? What happened to the company? What did you do today? Did you sell well? Did you not sell well? And suddenly you're running the company through your family, and your family relationships became stressful because the business might not be going so well. And even if it's going so well, you might be asked, okay, when am I getting that money back? Are you going to exit my shares soon? So you rely on external people such as angels. And angels is a fancy term, which means individual people who have some money that they want to invest in startups. And as individuals, they can contribute if they know the business well, if they have the time, but they're not institutional investors. They don't have that 10-year relationship with you. They probably will help you for a year, maybe 9 months, and that's it. I've been through that journey where I've been angel investing in a couple of companies, and my behavior there is quite different than institutional behavior. So probably you would invest for a year, and you help and support the company for a year, and then you move on to the next one. Which brings us to the last point, which is venture capital. Now, venture capital is quite widespread today. You're hearing about it everywhere. But one thing about venture capital from the point of view of entrepreneurs is that it's quite expensive. As I mentioned before, I'm investing in 10 companies, 8 of them are going to fail. So if you take my money and you're one of the 2 companies that do well, most likely you're going to have to return 10x or 20x of my fund, which means that I'm going to return an insane amount of growth. I want an insane amount of money in return for the risk that I took, and I want an excessive growth every year, probably 100%, 200% growth. So that capital can be quite expensive on the entrepreneur as well. And some businesses are not suited for venture capital. Now, with all of these risks and all of these questions that we have about the industry, what do really venture capitalists look for when they're investing in a startup? There is no scientific way. We try to understand as much as we can, but really it's 3 things for us that matter at Merak. The first one is founders. These founders have to be dedicated. It's a team of probably 2 or 3 people who are dedicated. They know the business inside out. They've done their market research. They're passionate. Then the second part, which is the market. The market has to be massive. We're talking about billions of dollars. Because as I mentioned, the companies that succeed are going to have to return the fund. And one important part, which I would advise if you're starting your company, if you're going to put time in any company, whether it's a company that has a 10 million real market size or a 100 billion real market size, you're going to spend the same effort and same energy trying to grow that company. And I would advise you to target big markets. Try to figure out as big of a market as you can to make your time really fruitful and to return money as well. But from our point of view, we don't want to invest in small markets. If the market is 10 million riyals or 20 million or 50 million, up to 1 billion riyals, we're probably not going to really consider it seriously. And the last part, because the first 2 that I mentioned are not defined in stone, it's something that we feel it's subjective, it's not objective. My opinion about the market and how it's going to change is my opinion. My opinion about the founders and how great they are and how amazing they are is still my opinion. So there is one point that we look at which is objective, which is the quality of execution. How well did you grow the company? What have you been doing so far? What did you learn? How fast the company is growing? Do your customers actually like the product or not? Because the customers are going to be what defines and what makes or breaks the business. So we care a ton about execution. And honestly, even if I don't believe in the founders as much, if I see great execution and the numbers prove me wrong, I'm so happy to be proven wrong and invest in a company. But these 3 things have to come together. They have to be great founders, and they have to be targeting big markets, and they have to show great execution. So if any of those 3 pillars fall, we're most likely going to pass on that company. And we pass on a ton of companies. We pass probably on 90% or 95% of the companies that come. So pay attention to these 3 things when you're first starting the company. And finally, we're going to talk about the last part. What do VCs actually do? Do we just give the money and then forget about it for the next 10 years? Not really. In Merak, we are partners with our companies, so we provide executive coaching to our founders because the founders grow as the company is growing. We also provide mentorship. We provide strategic support. We do market research for them. And there are two things that really matter for us, which is making them better leaders and helping them make great decisions. And that's a 10-year journey that we want to take with the founders. So if there is one last of advice, if you're starting a company and you're bringing in outside investors, think about that as a 10-year relationship. Do you want that person, do you want to talk to that person or get advice from that person for the next 10 years? If the answer is no, then you're probably better off doing something else. Thank you all for listening, and I'm happy to take the Q&A. One last part, I would like to thank Saud Steri. He's an Faisal alum. He really worked hard to get us here today and do this presentation. So please thank Saud. And I'm happy to take Q&A. في أسئلة؟ سم.
حلو. Keep it.
أي أكيد ولا؟
لا بس.
سم.
Thank you all for listening. Anyone has any question, please raise your hand. If no question, please join me to thank Mr. Ahmed, Mr. Saud for their contribution today.